big move last couple of days on Reliance Industries here, of course, which is the largest company in that space and largest company overall. I suspect some of that perhaps could be with regards to this fall in the price of oil we're seeing. Oil prices are falling, but products is what companies like Reliance sell, which is they refine the stuff and then they sell it. But are those pricing falling as fast? Perhaps no, and that leads to a difference in margin. But that should show up in standalone refiners, etc., as well, like MRPL, CPC. That was the story the last time around. This had happened, so we'll watch. But David is saying that some of this sort of refining capacity constraints that is also now behind us. It's not as tight as it was even a few months ago. Deven Choksey of KRChoksey is with us. Deven, good to have you with us here. Thank you very much. I mean, just to pick up on that point on Reliance on the refining side, Deven, what's your sense? How are things looking? And will we see better margins overall in the refining segment?
Yeah, good morning, Prashant. Well, I think the immediate breather is basically the fall in the crude oil prices. And because of the fall in the crude oil prices, I think two impact, I think, which one can count. The immediate one would be, I think, the windfall tax component is coming down because I think the fall probably, I think, is now averaged out to around $80 and around. So that could possibly, I think, bring down your windfall tax component, and that is where I think you will have some amount of savings. On the other side, I think for sure, with the cheaper sourcing of crude available with them, they are in a much better position to maintain the margin. And as you rightly observed, the cracks are not falling as sharply. Refining cracks are not falling as sharply as I think the fall in the crude oil prices. So to a greater extent, at least in the immediate period till the time it is normalizes, I guess I think they will be in a better position to register higher amount of margins going in this particular period. Of course, I think the price is required to remain stabilized. And as we were talking earlier also, anything which is around $75 to $85 to a barrel, I think is a good price for both the demand as well as supply side situation in the world. And that's where if that stabilizes, then I think you are going to see the normalcy in the refining margin and normalcy in the other petrochemical products pricing and margin also.
Deven, morning. Rima here. Your thoughts on the big shift that we're likely to see in the aviation space with the merger of the two Tata Group entities, Vistara as well as Air India? What impact is it going to have on Interglobe Aviation, SpiceJet? Is this perhaps a signal that one should pare down positions in Interglobe and SpiceJet if anyone does hold?
Rima, good morning. Well, my sense is that I think, yes, the demand scenario continues and higher occupancy per seat, I think, is continuing, I think, in most of the, aircraft as we are seeing across, I think, the players. So that is one good sign that we are seeing. At the same time, I think the prices probably, I think, would get rationalized. We have seen in recent past the surge in the prices because of very other factors, including the aviation fuel prices. I guess I think the price is coming down because of the crude oil. I think that also is likely to rationalize the prices in most of the cases. At this point of time, I don't see a major shift happening as far as I think the passengers traveling preference is concerned from Indigo to other airline. So that particular point I think is not something which I think immediately coming on the surface. But yes, I think the kind of price rationalization and I think higher occupancy per aircraft I think is basically going to drive the business going forward. So view is not, I think, to shift out of Indigo airline. I think we would like to stay. That I think the valuation becomes normal, then it is a better opportunity at both.
Hi Deven, good morning. Deven, I wanted to ask you about Gland Pharma. Yesterday there were reports that indicated maybe the promoter Fosun, they want to go ahead and sell out. Now that's still up in the air. But post-market they made an acquisition, and the valuation on that acquisition looks pretty fair. Close to around $200 million odd, one-time sales upon EV. But what's your sense out there? How do you approach the stock? The problem with this acquisition is margins are far lower, and ratios as well will get a little bit diluted. How do you view this stock?
Yeah, in fact, I think Nigel, I was about to add that point, and I think you mentioned it, that the margins in these acquisitions are low, and that could possibly be the reason for which I think they've acquired this company at a reasonably, I think, lower price as we have observed. Honestly, I think we don't have coverage on this company, so won't be able to specifically talk about, I think, how exactly it will benefit the company or otherwise. So may refrain from putting any further observation. I have just, I think, interpreted the news, I think, which came yesterday.
Deven, any thoughts on one of the movers yesterday was Bandhan Bank. It moved in the mid-session onwards. CLSA has upgraded their rating on Bandhan. Huge underperformer and many false starts as well. I mean, it looked like it was turning, but eventually turned lower. Any sense, any thoughts?
So, Prashant, I think the past pains, I think, are probably out as far as I think this business is concerned on the microfinance side. And as a result of which, I think most of the MFIs probably, I think, having the situation of lower amount of offtake, or I think maybe at times, I think one can say that I think they were reluctant in, I think, lending further because of the pressure which was there on the balance sheet side. But that situation has gone away. I think more or less the rural markets are quite, I think, healthy at this point of time. And after the crop season, I think probably are going to see higher amount of demand happening for the credit as well from the rural side. And that's where I think companies like Bandhan Bank operates. So maybe I think there is a case for re-rating going forward. But again, I think we don't have the coverage on the bank, so we will not be able to specifically say about the valuation aspect of it.
Zomato, there's going to be another big block deal, Deven, today. Alibaba is looking to sell some stake. Thoughts on Zomato?
Good luck to all of us. I think who have basically been waiting and seeing this particular company progressing on one side with a higher amount of market share. The investment, I think, is specifically not rewarding per se. And as I was making a point, that as a consumer, you would be very happy to buy the services of Zomato. But as an investor, I think we'll have to wait and see till the time I think the company actually starts making the profit. The fundamental view still remains. I think one would like to see the sustainability of the profit making for this particular company. Should that happen, then probably they could make a case to buy the stock at lower levels into the market.
Is there, Devin, more momentum? FMCG did very well yesterday, right? So Lever was up 3%, Dabur was up strongly. What is your sense? Is there more left here? The big complaint has been slowdown in rural markets, not just from analysts, but from companies themselves as well. We had the management of Godrej Consumer Products just yesterday telling our colleague that it is a big issue. Your sense?
Prashant, I think our market and analysts would always like to look ahead and not probably the current situation or the past situation. The current situation in which I think the prices of edible oil has come down, I guess I think that is going to be having a better impact going forward as far as FMCG companies are concerned, particularly in that area. So basically all input prices have actually started coming down, and that gives a breather effect. What was I think adverse in the first half of the financial year, probably I think that adversity is going away, and in the second half of the financial year, the normalization on the margin is expected. So on one side, because of the cost of input is coming down. On the other side, most of the FMCG company, in order to bring up the demand, they play with the weightages, I think in the product that they sell. So quite possible that I think they have probably would find some packages coming up with I think 20% more, 30% more kind of a product inside the packet. I think this kind of situation is likely to once again give them the volume-led realization in the growth going forward, and they could basically maintain the same price. Largely because of the pricing pressure coming down, one is expecting that in subsequent period of time, we are likely to see the demand scenario remaining relatively more stronger. And at the same time, in the rural economy, with the funds coming in the hands of the people after the crop season, I think it's going to revive the demand. So that is where probably our markets have actually given thumbs up to the FMCG counters at this juncture.
Okay, all right. Deven, before we let you go, I wanted your view on the real estate space and Oberoi Realty in particular. You have few listed players, and Oberoi Realty normally used to be the top name that everyone's talk about. Unfortunately, this Worli project is getting into some trouble or the other. What's your sense? I mean, the stock has corrected a fair bit from the recent peak as well. What would you do with the stock, or do you believe there are other better stocks that you would rather invest in from the real estate pack?
So, Nigel, I think this is a common phenomena with, I think, most of the real estate construction companies. Very in a particular quarter or particular period, I think you might have some amount of cloud on certain projects, and otherwise, I think it could probably, I think, dampen the stock prices. In my viewpoint, I think the demand scenario for real estate remains intact, and I think that continues to remain strong. Of course, I think in last 2 years, whatever the surge in the demand that we have seen is now started getting a little bit normalized. But the premium housing, particularly, I think where the demand scenario remains, I think, quite strong. is continuing in coming period. So from that perspective, I don't see too much of a challenge for real estate companies. In my viewpoint, I think to play on a safer side, I would probably prefer to stay with housing finance companies more than buying into any of the real estate companies for a simple reason that housing finance companies are recording around 20% kind of an average growth in their credit lending. The book size is growing by that percentage. And as a result of which, I think you are pretty sure about the sustainability of the business. And because of that particular reason, I think one could possibly remain relatively more safe compared to the volatility which would have otherwise in a construction sale kind of an activity. So preferable, I think, is housing finance vis-a-vis investing directly into the real estate companies.
Deven, thank you very much for joining in. Need to slip into a very short break. On the other side, we'll invite Sudarshan Sakhani